Good morning. It's Wednesday, July 30th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So a quick look at the price action in the gold and silver market. Looking at gold futures up about $2.40 at 33.83. Something to note is that's the quote on the December contract. If you look at the open interest and the volume here, you'll see that December had jumped that October contract. So when you look at the screen, you look at CNBC or any of your financial news sources, you're going to see that December contract most likely quoted. So if you're in the October contract, you may want to use any kind of volatility here to try and reposition and swap out that October contract for the December, because it'll just be easier on the eyes to look for any kind of price action there. Now, gold has been one of the strongest performing major commodities this year, rallying about 25%. And it was fueled by the safe haven demand, the weakening dollar, and the buying by central banks. And the bulk of those gains, they were really concentrated in the first 4 months of 2025, peaking in about April. And then since then, what have we seen? A series of lower highs on the chart. Yes, gold has had some news flows and tried to fuel and break out to the upside, but you could see that it was kind of hammered down at those particular price levels. Now, what I'll do is I'll look at, was it a higher high? Was it a higher low? Can I draw a trend line connecting these lowers? And is that the new line in the sand here for upside price momentum? So it's more of a wait and see here. So since then, gold futures have really tracked sideways. Now, your critical level of support on that August contract was 3,300, where futures came down to it and bounced from there. We're going to want to look in the chart back here as we update it here to the December contract, where that critical level of support is. And I anticipate it right around that 33.50 level because of the price difference between August on to December being about $56 on the rollover. Now, looking forward at the gold market, gold futures, they are holding a small advance ahead of the Federal Reserve's interest rate decision. They gained about 0.5% yesterday. They're slightly higher as of this recording. Now, the Fed is expected to hold rates steady, and what they'll do is they'll stay data dependent. They're going to cite the resilience of the U.S. economy. They're going to cite a wait and see approach here and take it meeting by meeting. Traders are going to be watching for key indicators to gauge how the Fed officials may position themselves ahead of the September meeting, where a rate cut looks likely at about a 66% chance. You go to the silver market, silver disappointing, down about 20 cents as of this recording, sitting at 38.09. Many traders were adding October call spreads, looking for any kind of potential breakout and any kind of tailwinds here from the copper market, from other outside markets, in order to bust through that 39.91. So futures, they've really been consolidating in the past 3 trading sessions after that $1 drop last Friday, reaching 39.91 last Wednesday, and taking more of a wait and see approach. Now, looking at the markets overnight, we are in this final stretch of July. August will be here starting on Friday. And with the Fed decision and a huge list of data and earnings coming out, the rest of the week is going to be set by the tone for the second half of the year. So you got the Fed meeting, you've got numerous economic data. You're going to have Jerome Powell give a press conference here. And really, this is what's going to be kind of the launching pad that we go into the August month. So S&P futures just slightly higher, 64.13. NASDAQ just slightly higher as well, up about 50 points at 23,505. You do have the Russell gaining about 9 points here, up just under about 0.5%, 2263. The Russell has been the one that I've been watching the most recently, because the Russell and the S&P have been heavily shorted by hedge funds. Why did they put those on? And same thing with CTAs. Well, it was because of that August 1st trade deadline. But since they built that position up, what's happened? President Donald Trump has come out with a number of different strategies as far as getting trade deal done and things like that. So yes, we are approaching that key deadline. Yes, there is kind of all eyes on China, and is this deal being made, because they're getting mixed reports and mixed reactions. And that's where we saw a little bit of volatility here in the market yesterday in the S&P 500, but not that much volatility, because you look at where we are at in correspondence with all-time highs. We're just below that all-time high level. So the Fed, they are expected to hold those rates unchanged, but a number of dissenting rate centers are going to come out and also present what their ideas were, if how many there were, and perhaps we'll see some interviews after. One of the ones that I'm really watching is Waller, because of the fact that he is being named as one of the people that could be a replacement. And he was the one who said, why not just cut rates in July? Why wait to September? What difference is it really going to make at this moment? We'll also have a slew of economic data coming out with second quarter GDP data, and then also Meta and Microsoft are going to report after the close. So if you look at the tariffs and the tariff announcements, apologize here, turn this down. So the tariff and the tariff announcements, Trump is set to make his final call on maintaining a tariff truce with China because it's set to expire in about 2 weeks. So the extension would mark a continued stabilization in the ties between the two world's biggest economies. I think that's most likely the scenario that will play out here, kind of kicking the can down the curb, and you'll have to see some of those hedge funds kind of roll forward some of their positions, some of their short selling here. And then if you look at the option flows, they're really pinned on both sides at the moment, with some of these hedge funds and some of these other vol type traders really watching the gamma, and what's happening is they're having to short futures as they move up, they're having to buy futures as they go down. So the strategy that I'm looking at here is I expect to see more range bound action in the S&P, with 6380 being most likely your first support level 1, 6450 most likely being your resistance 2, where you get a break above 6450 could open up the door for 6500. A dip below that 6380 could push that market back down to 6330, where I would expect to see some short covering occur, because the reality is that the FOMO is really starting to build up because of the fact that U.S. equities continue to march higher, and many of these funds, these CTAs, are on the short side of the market. Now, looking at some of the earnings that have come out, we had Starbucks shares. They are higher, up about 5% in the pre-market trading, as those net revenues came in higher than expected here. And then we'll also have the results after the bell from Ford, Meta, Microsoft, Qualcomm, all coming out after the bell. Looking at the outside markets, 10-year treasury yields really came off yesterday, helped fuel a bit of a rally in that gold market. Then you look at the dollar index, just ever so slightly higher. Europe surprised with better economic data. However, the euro currency shot up into positive territory, now coming off just a bit. You look at the volatility index, ever so slightly lower, getting a little bit of a bump up yesterday on that small wiggle we saw in the U.S. equity markets. And then finally, you look at crude oil futures. Well, oil futures, they are holding on to one of their biggest gains here in 6 weeks after U.S. President Donald Trump reiterated that he may impose additional economic penalties on Russia if a agreement to stop this war here is not reached, or a truce with Ukraine at the moment. We're also going to have some economic data with those MBA mortgage applications, ADP employment change, GDP, personal consumption, core personal consumption expenditures for the second quarter, pending home sales, but of course the main event is still going to be the Fed's latest policy decision. Now, looking back at the silver market, the ETFs, they did cut only about 195,000 troy ounces of silver holding in the last trading session, bringing this year's net total purchases to 74 million ounces. So this was the first sell that I've seen in 7 days. And I think that it's really, the market has just been kind of sitting there. And then now what's happening is that the market, they really want to see this breakout to the upside, because I think that some of the people that are positioned in that ETF are kind of losing patience. And we're seeing that in other markets as well, where Bitcoin is just really tracking sideways as well. So year-to-date percentage change, both of them up about 10%, and the gold-silver ratio sitting at 88-1. So you got any questions, shoot an email to info@bluelinefutures.com. And remember that futures and option trading, well, it does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading.